Alright folks, welcome back to another teaching. In this video we're going to be going over time-based liquidity once again because I've taught this before, but I'm back reteaching it. That's why the title says section 2, because there's some new things I need to teach you when it comes to time-based liquidity, okay? There's going to be at least 6 new things that we're going to be going over, such as pre-market, daily highs and lows, weekly highs and lows, opening ranges, final hour macro, and the lunch macro. Those are the 6 new things that we're going to be going over, and there might be more stuff in the future that I might have to go over. So there might be a section 3 to time-based liquidity, but for now, there's a section 2, okay? I'm going to go over what time-based liquidity is, and literally after this sentence. Time-based liquidity is simply liquidity that rests at a certain time, okay? Or rests in a certain, time interval. You get what I'm saying? It can be, I don't know, New York highs, it can be London lows, it can be Asia highs. You get what I'm saying? So it's liquidity that forms at a certain time. That's the definition I was trying to get to. That right there, that's the sentence I was trying to say. It's liquidity that forms at a certain specific and very important time, okay? And this can be stuff like kill zones, macros, it can be like pre-market, it can be daily highs, weekly lows, anything of that matter. Anything that's dealing with time, it could be that, okay? But first, let's go over, I don't know, opening ranges. Oh yeah, did I mention opening ranges? I don't think I did. But yeah, opening ranges, we're gonna go over that first, okay? Wherever the 9:30 opening is of today's price action, which is around here. All right, if you don't know about opening ranges, there's gonna be like a little pop-up at the top right over here that links the opening ranges video. So if you don't know what opening ranges are, I recommend you go and watch that and then come back here, or I can just teach you about opening ranges right now, which I might do. But for example, the 9:30 opening range, which is 9:30 a.m. to 10 a.m. New York time. Remember that, New York time right there. Always refer to New York time whenever I'm referring to time. Always refer to New York local time. Just have that in your head from now on forever. Okay, whenever I'm teaching and I refer to time, always think of New York local time, or set your time, or your time zone to New York local time. Okay. So the highest high and the lowest low of the opening range, of any opening range really, can be liquidity, okay? And it's not used for just some specific purpose like, oh, price will purge it. It doesn't have to do anything specific when it comes to these points of liquidity. It can do anything to them. It can run through them. It could purge them. That's really the only thing it can do. It can expand through them or manipulate them. That's really it, okay? Which is purge or run, okay? With these liquidity levels or liquidity points or points of liquidity, you can only have 2 things: a liquidity run or a liquidity purge. Okay, that's really it. But we're gonna go ahead and find the high and low of the 9:30 opening range, which would be, let's see, the highest high from 10 is right here. That's the highest high, and the lowest low is obviously right here. I don't have to get too specific, but it's obviously right there. So buy side liquidity. So now we have sell side and buy side liquidity up here. So what would this be? This would be the lowest low, or the low of the opening range, okay? And then we have the high of the opening range. Very, very cool, right? But where does the high of the opening range, what is it relative to? These highs right here. So what does that make that? Relative equal highs. Or accumulated liquidity. Oh my god. How beautiful is that? That is amazing. What the heck? Yeah, I know. Accumulated liquidity right here. So what is price going to do? You know this, price tends to seek the side that is smooth, okay, which is buy side right now. And what I mean by smooth is when there's relative equal highs on a certain side of the market, okay? In this case, being buy side. So what is price going to do first? It's going to hunt the buy side. What is it going to do to it? Is it going to hunt it or purge it? We're not looking for any setups here, in which I might, show you a setup here. But as we can clearly see, price accumulates, has time distortion. Then it explodes. Kaboom. I wish I can make a sound effect of it going higher. Well, no, it's going down. But, it goes higher into buy side liquidity and purges it. Why does it purge it, JJ? Because look, when we hit it, did we even try? Well, we tried to go above it, yeah. But did we push through it? Did we really, go like Superman and fly up through the air? No, we didn't do that. We came up to it and stopped immediately. So what does that tell us? It wants to go lower. But how are we going to take a trade on this? Isn't this a little suspicious? We don't have enough influences for that. Well, let's look. First, we have price failing to break this high right here. So what is that? Oh my goodness, that's a failure swing. Well, that really needs to be drawn over here because this is the failure swing right there. So we have a failure swing. And then, well, I don't know for sure, but this might be an SMT. I can check real quick. That might just be an SMT. Let's see. I can switch between the assets. Thank you. Let's see. Between those two highs up there, let's check. Nope, not an SMT. So there's no SMT up there. Well, I think there is a miniature one right here. Yeah, there is. If you zoom in right there, between those two highs, there is an SMT right there. If I put like a line right here, if I can get it. But you get what I'm talking about. There is an SMT right there at those highs. So we're going to switch back to the ES, which is what we were on. And there was an SMT right here at these two highs right here. So we have one, a failure swing, and then two, an SMT right here. So that's how many confluences so far? 3, because liquidity purge up here, these relative equal highs, or at this accumulated liquidity right here. Failure swing, SMT, break in market structure. Uh-oh, we're getting out of the rigamic. We're getting out of the rigamic. Very cool, guys. Very algorithmic. We come down, break structure. We have the rest of this undelivered fair value gap right here. What is price going to do to it? Is it going to disrespect it or is it going to respect it? That's what we're looking for. Price comes down, uses the undelivered fair value gap to go back up, create immediate rebalance. Price, after it comes back up, does it tend to go any higher? Does it want to go higher? No, it doesn't. So what is this? A lack of displacement. So we can say this is, if I have it on here, yeah, lack of displacement right here. We're not wanting to go up past these highs here is lack of displacement. So price does not want to go higher past all this accumulated liquidity back here. So what is that telling us? Price wants to keep going. So where's our entry going to be? Right at the immediate rebalance. Right there. Pretty nice, isn't it? Then we're going to set our high. Not our high. I always say that. But our stop at the top of the immediate rebalance. And as you can see, price begins to disrespect the fair value gap there. So at first, if this lack of displacement wasn't here, I would have waited for this fair value gap to get disrespected. So for example, if price immediately rebalanced and then started going higher, I would wait because there's no lack of displacement. I would wait and be like, okay, is price going to at least disrespect this fair value gap? And it does. In that case, I would have shorted at the fair value gap instead of this immediate rebalance here. But we sell, right? We sell right there. But where do we target? Well, where is our target going to be? You see that right there? You see that? What is that? The low of the opening range. Wow. But we're just gonna take this, right? We're gonna take this and we're just gonna target these equal lows right here. You'll see why in the future. And then boom, there's our trade. Lasted about 7 minutes. Hey, that's dope. That's money is money. Well, that's about 8 minutes, but still, money is money. But no, I was right. 7. Yes, 7 minutes. Wow, that's pretty good. But yeah, 7-minute trade right here for a 6 risk reward. Pretty dope, isn't it? So you can already see how we're using time-based liquidity to frame our trades or to gain a narrative on price. You're starting to see it already. So let's go ahead and pull forward and see what price did afterwards. After that run lower, I can have a good seeing on price or a good eye on price. After that, price just consolidated. Time distorted, kept it time distorting and just time distorted. What are we doing within this time distortion? What are we doing, JJ? Do you know what we're doing? Lows of equal lows here. That's created. See that? Got sell side liquidity. That's down here. After the time distortion, well, even still during the time distortion, price comes down, breaks those lows, has a lack of displacement, doesn't want to go lower, as we can see here. And when we come below it or try to come below it, we're like, nope, we're going to go right back higher. So what is that? Lack of displacement. It doesn't want to keep going lower. So what could we do here? We could take longs, or we could wait and be like, nah, we're just gonna wait. We're aiming for that down here, because even if we buy, the only target is right here. We're framing. If you were this type of trader, we're using only the opening ranges liquidity to base our trades off of. In which we're not doing that here. We would just be buying just to buy right here. In which you don't want to do that. Okay. So we're like, okay, we're gonna sit this one out, and we're still gonna see if price goes higher. In which it does, and goes all the way back up to what? This accumulated liquidity right there. Pretty nice, isn't it? So you have more accumulated liquidity right there. And then what else do we come to? You probably noticed it by now. Probably did or probably didn't. Boom. Optimal trade entry. Pretty cool, isn't it? Yeah, I know, it's pretty cool. And then we also come, does this order block get touched? I'm not sure. I don't think it does. But yeah, we still have this reclaimed fair value gap all the way out here. So this could be completely pulled out. Right here, this reclaimed fair value gap. I will be teaching that in the future. You don't know what that is. None of you do. Well, maybe some of you do if you watch ICT. But if you base all your knowledge off of me, then you don't know that yet. You will learn that in the future, okay? But price comes up all the way to accumulated liquidity, reaching the optimal trade entry levels. After that, price begins to, start slowing down, slowing down, slowing down, slowing down, showing that it does not want to do what? It doesn't want to push past these highs, okay? Eventually, price begins to time distort, time distort, time distort, and we drop lower. Break of structure right there. Wow. Pretty algorithmic, isn't it? Yeah, I know. Very algorithmic. What else do we have? We have this order block here. But guess what? Price already uses it and displaces, so this array is exhausted, sadly. So we cannot use that anymore. But what did I draw out? That reclaimed fair value gap. Let's see how many times it came up to it and respected it. You want to see that real quick? Let's pay attention. Comes up, 1. Closes below, that's respect. Comes up again, closes right inside of it. So it doesn't go outside of it. Okay. That's 1. Close outside of it. That's 1 level of respect. Come back in, we close inside of it. So we don't want to go out of it. With this candle, we just literally open higher. But what do? Price is like, uh-oh, we have to retreat. And we come right back down and we crash. Boom. See that, right? Yeah. Very, very interesting. It's very interesting, isn't it? So we're going to take our shorts right here. Right there at the second tap of the reclaimed order block, because around here it was still, pushing through it a little bit, but we can see around here it started to move away from it. Okay, so that's where we want to get our entries, when it's moving away from it. And we set our stop at the, let's see, where would our stop be? We set our stop at the high of the reclaimed fair value gap, which is right about there. So it's not too bad of a stop. And then where do we set our target at? Do you remember? Do you remember those lows? Oh my goodness. What the heck? How cool. So we know that price is going to come down here, but there's extra targets. Dolphin trade entry. Where does it land? Does it have anywhere to land at? Barely. Not really. I'm not gonna lie to you. It barely has anywhere to drop to. I mean, we have this swing low here with the rest of this fair value gap, so we can come here. We can drag this swing low all the way out. Drag it all the way out. And guess what? We keep dragging it all the way out. So, what standard deviation lands next to that? The 1. So, is this a good target? Yeah. And if you want to verify it even more, let's drag out this fair value gap, because there's still the rest of this undelivered fair value gap right here. So if we just pull, keep going, and we can pull it over again. It's like we're pulling a mine cart or something all the way over here, like a shopping cart. There we go. So we have our sell side liquidity line right here. I don't know if you can see it, but it's like right above. It's right there. It's like pretty thin, but it's resting right above the fair value gap. And this is the undelivered fair value gap right here that can be filled in. And what is right under it? The 1 standard deviation. So our whole narrative was price to come down here to the low of the opening range. And we take our target, and we're like, okay, price is going to go here. We know that because that's where price wants to go. That's where our bias was, okay? We're like, we can make a little bit more money by seeing what else we got, because we did the analyzation with that optimal trade entry up here. Wow. Oh my goodness. Is that the 1 standard deviation? Let's drag that all the way down. 1 standard deviation right there. Oh my goodness. 14 risk to reward. Boy, are you serious? What? Come on, JJ. That can't be real, boy. Like, are you joking me right now? Are you joshing me? No, I'm not. I'm not. You know what? You want to make it a little bit more realistic? Sure. We can drag the stop loss to a random point. Sure. Is that more realistic to you? A 6 risk to reward? Fine by me. But if you want to get those nice, precise entries, hey, we set it right there. And that gives you that 14 and a quarter risk to reward. Okay? And that's just based off of using the highs and lows of a opening range, which is time-based liquidity, because an opening range is based off time. And what is the opening range? 9:30 a.m. to 10 o'clock. What is that? time. Whoa. So algorithmic, so institutional, so crazy, isn't it? I know. Really amazing. But those are our two trades there. Right along there. Those are our two trades. And yeah, what's the next one we're gonna be over? We can that was did you hear it? Did you hear how I just said that? I'm this I wow, I need to cut that out in which I probably wouldn't. I'm really tired. It is 11 o'clock at night. Well, 10:53 if you want to have the specifics down. But yeah, it is 10:53 at night, as you can clearly see. And I'm tired because you just heard that crazy stutter. But that was just using opening ranges by itself. And I might cut that previous insane stutter out, in which I'm probably not because I'm tired. But next, we're going to be going over. Let me pick one. Let's see. Lunch macro. Since we're right here, we're going to pick the lunch macro. The lunch macro is 11:30 a.m. to 1:30 p.m. New York local time. Always remember that, okay? So, wherever if I can mark it, is it on this candle? Yep, from here to let's see, is this the 1:30 candle? Yep, right there. Within the lunch macro, you can find the highest high and the highest low within these within the lunch macro to see how price will treat it, because price is either going to do two things with those 2 points. It's either going to use it to manipulate and or purge it, or it's going to have a run on it, which is expand. Okay, and the highest high and the highest low would be this right here, boom. Then the lowest low would be this right here, boom. So what do we have? Sell side of the lunch macro, and do we have buy side of the lunch macro? Very, very cool. So we're like, okay, the lunch macros ended, so we're like, okay, let's jump in these markets and see how price acts. We have buy side liquidity up here, but we can see once the macro ends, this turns into an intermediate term swing. Why? Why does it do that? I made liquidity purge by accident. There we go. Intermediate term swing. Why does it do that, JJ? Pay attention. Do you see that? Do you see what's going on here? I don't think you're looking. Look. Open your eyes. Look. Oh my goodness. Just a look. You see that? We have swing high and we have another swing high that are both below this high here. So what does that make this? Intermediate term swing. Oh my goodness. What the heck is JJ teaching us? So what does that indicate? That price is not going to come up to this level because it's an intermediate term swing. It'll come up to it later, but definitely not now. Okay, so what can we expect price to do? Go lower. Where can we go lower to? Right there. Wow. Very nice, isn't it? Yeah, I know. You already see what's going on. I don't have to explain it, do I? Yep, you already see. Price time distorted, time distorted, time distorted, and time distorted again. This 150 to 210 macro was done. It used that to time distort. It ended, and then it just said wee and hit your target. If you were to trade the lunch macro, okay, or trade after the lunch macro and use a lunch macro for your targets, okay. But the one unique characteristic that lunch macro has is watch this. I'm going to teach you something. Starting from 11:30, okay, 11:30 a.m. You want to find the latest key swing, okay. And I mean like obvious highs and lows, like to where you can show this chart to a trader, and you can point out in the beginner trader can point out like, okay, price went up here and then the market went down here. Like you can show that to a beginner and they'll see when the market will go up and down. You get what I'm saying? That's what I mean by obvious. Like you show a chart to a beginner and they point out the obvious points. Okay, so that's what I mean by key highs and key lows. Obvious points in the market to where you can clearly see that price went down and created a low, and price went up and created a high. That's what I mean by that. So stuff like this: low, high, low, high, low, high. Like you get what I'm saying? Obvious, not stuff like this low right here, and that low and that high. You get what I'm saying? I don't have to keep explaining this, but starting from 11:30, you want to find the latest swing, but not like in basing it off of finding the swing that's in the narrative of price. No, just the latest swing in general. Okay, just the latest swing. In that case, that being this one right here. See that? That low right there. That's the latest swing. You're probably gonna be like, oh, but this is good too. No, it's not. It's not as potent as this. It's not as important. This one really stands out. This right here stands out more than that. So we're looking at this one right here. So this would be what? Sell side liquidity. what price will tend to do during the lunch macro is it will tend to seek this point, okay? Or sometimes what it'll do is it will accumulate during the lunch macro. Like it won't touch this level. It'll create this level, and then lunch macro will kick in, and it's like la da 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 la da da da, and it's just gonna accumulate the whole time. And then either right before lunch macro ends, it'll seek this level and manipulate it and then deliver, or sometimes it can accumulate, like I said, again, accumulate the whole time, leaving that level there by itself alone. And then after the lunch macro ends, price will begin to seek that level. But this right here is a very, very important level, okay? And remember, it must be starting from 11:30, you find the latest swing, but that swing must be after 11 o'clock, in which it is, because that, I mean, not 11, but it must be after 10 o'clock, because that swing right here is at 11. Is that before 11:30? Is that the latest swing before 11:30? Is it after 10 o'clock? Yes, 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 and yes. All yeses, okay? So this would be your swing that you look for. There's no name for this. I just know that this is very potent, okay? Price can use this to manipulate, it can use this to purge it, or it can be it can even be a liquidity run for you. If you want to take this and target that, that can be a target for you. But this, just know that this right here is very important. Then price creates even more liquidity by making relative equal lows, making retail traders think this is support. And it's like, okay, let's buy off of this. Let's buy. They buy up, and then the smart money is like, and then the market just drops and seeks that level. So just know that this right here is very powerful. Just know that in the future. There's really no trade for it because just based off of hindsight, it didn't really go anywhere. But just keep that in mind that this is a very good time-based liquidity point, okay? All right, next we're gonna be going over let's see what else we can go for. We can go to the daily and look at the daily highs and daily lows. This is nothing hard, nothing too crazy. You know what I'm saying? You just mark the, what does that set? What does that mean? Use settlement as close on daily interval. I guess I already had that on. Okay, it doesn't matter. But it's simply just highlighting the previous day and previous day low, previous day high, and using that as your targets, or using that as liquidity purge that price can come and seek and just manipulate. Okay, it can be used for really anything. I'm not going to say, oh, it needs to be used for this. Price will tend to seek it or purge it. No. So right now, for example, if we mark out the previous day high and low, that's a little too far. We can bring this a little bit more in, just like that. This would be buy side liquidity, and this would be sell side liquidity. For example, if we had the bias that price is going to go up next day, which is today, because I'm recording this at night, price will tend to come lower to manipulate the previous day low, and then go higher and have a run on the previous day high. So it's nothing too crazy. And then it's the same thing applies to weekly highs and lows. It's nothing insane, nothing wild, but you can use the weekly highs and lows to basically apply that same concept. It's still the same thing, liquidity purchases, liquidity runs, same exact thing. You can use these levels for your targets. You can use it to expect manipulation, whatever your narrative is, you use it. Okay, you use it for that what's the word, for that instance or for that situation. Okay, next is the final hour macro. So we're going to jump all the way back down to wherever that time is. Here we are, whatever that time is, which is 3:15 to 3:45. That is the final hour macro. What you can do is find the highest high and highest, highest high and lowest low within 3:15 to 3:45 p.m., which is the final hour macro, right? And you normally want to look for that if the power hour or final hour macro consolidates, okay? In which, in this case, it does not do it, okay? And the reason I say that is because if the final hour accumulates, right, the high and low that it creates within the final hour, the last true hour, which is 4 to 5, it'll tend to seek it. Okay, you're probably like, oh, well, it did it here. No, that's after it. That's on that new day opening right here. That's that 6 o'clock new day opening. So if we look back from, let's delineate this right here, 3:45. Is that it? Yep, 3:45 to 3:15. We can clearly see that when the final hour macro kicked in, it delivered. So it didn't consolidate. Sometimes What it's programmed to do, it's programmed to spool. It's programmed to be like, okay, there's no one trading at this time, so let's do everything we got to do. That's what the algorithm treats it as. But sometimes, if there's been a lot of work done over here, like a lot of displacement going on over here, which there really wasn't, price will tend to consolidate during the power hour or the 5 hour macro, in which it didn't. So I'm going to say this again. If price consolidates during the 5 hour macro, mark out the high and low of the final hour macro, so you can trade, if you do trade it, so you can trade it during the true final hour, which will be 4 to 5 p.m. Okay, and then after 5, well, at 5 is that, the market closed, and then 6 o'clock opens price back up. But I'm gonna say this one more time, and I'm sorry for yapping, but in a single sentence, if the final hour macro consolidates, mark out the high and low, so you can trade it if you trade the final hour and make some profits. Okay, that's the final hour macro right there. Very simple, nothing too crazy, nothing too crazy. Now this is where it gets good. This right here, this is where it gets good. Pre-market. Pre-market is where it gets good. This is what I'm excited to see right here. This is where it gets good. So wherever 7 o'clock is, 7 to, well, I already placed the line, so I might as well move it over. 7 all the way to 9:30 right there. Boom. Okay. So first off, this is pre-market, 7 to 9:30 a.m. New York local time. You want to mark out the high and low of pre-market, because price can use it for whatever situation, for whatever you need it for. It can purge it. It could have a run on it. Whatever you need it for. Like I said. So here's the low of pre-market, and here is the high pre-market. So we got buy side liquidity up here, and then we got sell side liquidity down here. Pretty dope. So what is this? What is this right here? What is this high? Well, if you pay attention, it is this a long-term high? Wait, hold on. So we have a intermediate term high here, right? And then price comes up. I have to analyze this real quick. Hold on. Just a second, because I got to see if this is a long-term or a intermediate term. Nope. This is a intermediate term high. It would have been a long term, but this is a intermediate term swing. So what does that tell us? That price is not going to come up there when 9:30 hits. It's not going to come up there. It might, but it is most likely not going to. Okay, price is going to do other things first before coming up here. Okay. So what do we have left? We still have this sell side liquidity, but before 9:30 comes in, price already seeks it. Okay, so what does that what does that tell us? What does that do for us? Break a market structure. Why? Because liquidity purge up here. See that? Liquidity purge right there. So we have the liquidity purge. We have that rush lower right before 9:30, creating what? Breaking market structure. And what else do we come back up into? This volume imbalance right here. Do we respect it? Yeah, we come above it a little bit, and then we come down. Do we tap it again? Come down lower. Do we come back into it again? Close below it. So what are we overall doing? We're respecting it, right? So this could be your sell right here. But I'm gonna tell you something real quick. Every hour of pre-market, okay, look 30 minutes behind that hour, okay? So for example, 8 o'clock, you look 30 minutes past that and look for relative equal highs and lows, because price will tend to seek that, or just have it on your chart to see how price treats it, okay? Let's do that real quick. So starting from 9, which is right here, 9 o'clock right here, we look back 30 minutes. What liquidity levels do we have? Oh my goodness, do you see that? It's the relative equal highs right there. Whoa, isn't that crazy? I know, that's crazy, isn't it? So if we, for example, drag this out again, we just mark it as buy side liquidity, and we're like, okay, that's there, but we don't know what price is going to do to us. We're just going to wait. Price comes up to that level, has lack of displacement getting through it. So what is that? Liquidity purge. Wow. Okay. Now, when you get these levels, you want to expect price, like I said earlier, to use these levels. Okay, in any way, shape, or form, which is purge, run through it, whatever it has to do. Run through it, come back down to it, and then head back higher. Whatever it has to do, or whatever you think it's going to do, then A, it's going to do it, because prices will refer back to these levels, okay? And even starting from 8 o'clock. If you go from 8 o'clock, which is right here, and go back 30 minutes, we can see that we have relative equal highs up here. We have relative equal highs right here, up here. But what do we overall have? We have this intermediate term swing. And what is it right next to? These relative equal highs. So You can clearly see that price, it may not want to go all the way up there. You know what I'm saying? It may not want to go all the way up there. And then just not even predicting it, just looking at price, like live, for example, if this was live, right? And you see that price is struggling to get through these relative equal highs here and how it's treating it, because I did tell you price is going to use these levels, in which it did here. Price comes up, purges it, but guess what? It struggles getting through it. So what does that tell us? What does that tell us? What does that tell us? It's not gonna go through here, and it's most definitely not gonna come up here. So this relative equal high, these relative equal highs here that we established, I said sell side liquidity, but this is really buy side. This buy side liquidity up here, these relative equal highs, aren't gonna get tapped because it can't even get past this. It can't. It literally cannot even get past this. And then if you want to draw an optimal trading tree, sure, we can do that too. And then we're at optimal trading tree levels. What is at the optimal trading tree levels, JJ? We have a propulsion block right here. Oh my god. Oh my god. What? Is this guy serious? Oh yes, I'm very serious. I'm so serious. So you see what's going on, right? Yeah, I know. And then look, even starting from 9 o'clock again. 9 o'clock, go back. What do we have? Relative equal lows right here. So what is price going to do to that? It's going to refer to it. Does it do it? Yep. Wow. Absolutely amazing, isn't it? Yep. I know. Very, very nice. Very nice. So you're starting to see how time-based liquidity is pretty overpowered, isn't it? Okay. Now you're probably like, do we use 7 o'clock and go back? You could. You could, but I wouldn't recommend it because there's not enough volatility for price to even create relative equal highs or lows. So it's kind of pointless. So the hours that you want to look at is 8 o'clock and 9, because that's the only 2 whole hours within pre-market that you can look 30 minutes back without going outside of the session itself. So from 8 o'clock, we got these levels up here, but price is not going to come up here because we have so many PD arrays acting against price. And then price treats those PD arrays as like, okay, we don't want to go up here. Let's not go up here right now. Just by this what? What do we call this right here? Lack of displacement. Wow. Absolutely amazing. That you see this, right? Yeah, I see it. So for example, let's say we take a trade right before 9:30 opening kicks in. We take a sell at the propulsion block and we want to see some respect from it. So let's say right here, when price begins to sell off away from that propulsion block. We already have all our confluences down, so we already know that price is going to go lower. Where are we going to set our stop at? At the propulsion block candles high. Right there. Then what are we going to target? We can target this right here. We can either target the low of the optimal trading tree, or we can target these equal lows down here. Or this right here is the low of the optimal trading tree and the low of pre-market itself. So we can target this. And if we target it, boom, this target gets hit before 9:30 even starts. Isn't that crazy? Yeah, very crazy, isn't it? I know. But guess what? We have more relative equal lows down here. What standard deviation lands next to it? The 0.62. Oh my gosh, what can we do? We can drag or take profit down there. And oh my god, wow, what does that give us? Exactly 7 risk to reward. Wow, absolutely amazing, isn't it? Yeah, even through all this terrible price action, you still made banger money. You still made killer money. Isn't that crazy? Yeah, pretty crazy. So now you know about, let's see what you know so far. For example, was saying if you watch section 1 and section 2, you know about killer zone liquidity, you know about lunch macro liquidity, you know about final hour macro liquidity, you know about daily highs and lows, you know about weekly highs and lows, that's 5 already, you know about pre-market liquidity, and then you know about opening range liquidity. So that's 7 time-based liquidity concepts that you know. Congrats. I'm really surprised I even made it this far in a video, because it's a pretty long video, but a very informational one for the ones that are going to watch this entire video. Okay, a very informational but decently long video. Okay, hopefully I wasn't yapping too much. You can watch this in like 1.5 speed, but I probably said it a little too late because it's the end of the video. But yeah, I'll be in this video here. I'll see you guys in the next one. Good luck and good trading.